Hey, Dustin Tibbetts, financial advisor with Jazz Wealth. How we doing today? Hope you guys had a great weekend. Welcome to the Doe Show for Monday. By the way, a little heads up, tomorrow there will be no Doe Show. We have a couple meetings in place that we just couldn't get around. It's got to be right around 1 o'clock, so we can't do the Doe Show. However, I wouldn't leave you hanging. I've got a little something special planned for you if everything goes well. It will be up tomorrow, exactly at 1 o'clock. We'll post it for you. So you have something very interesting to watch, I think, and I'd like your feedback on it. So if you happen to check it out tomorrow, personal finance, it could be business related, anything that we can do to help you get your dough straight, we want to do here. If you've never heard of me before, my name is Dustin Tibbetts. I'm a financial advisor with Jazz Wealth Managers. We manage retirement accounts, long-term investments, 401k rollovers, Roth IRAs, IRA transfers. If you need help with all that geeky nonsense and you want somebody to actually manage the investments for you, not buy mutual funds and just kind of do whatever with it, we're here for you. I hope you'll check us out at jazzwealth.com. Well, one of the things I want to talk about today, this stems from an article that I saw that millennials are basically clueless when it comes to investing, and I hate that. I am building a speech. Next year, I'm going to be doing all kinds of speeches at the industry conventions all over the country, and I am building a counter argument to these sort of articles that millennials don't care, they don't want to invest, they put their money under their mattress. I've never heard of that. I don't have one friend, I'm a millennial, I think, right? Depending on how you look at it. I've never had one friend say I stick money under my mattress, but yet there's an article a day that says millennials are scared of the stock market. They're scared of everything. They just want to be in pot stocks and crypto, and I don't buy it. But there are some things that I'd like to point out that maybe you know about investing or personal finance or money, and then there's some things you don't know, and maybe you don't know that you don't know them yet, so I'm going to tell you today that you don't know what you don't know already. All right, having fun on a Monday. Here's the first thing. Timing. You do not know how to time your investments, period. You can't buy stocks and time them. You can't buy short-term investments and time them. I have taught literally tens of thousands of people all over the globe to invest, and in particularly short-term trading or day trading. Maybe 2 out of 100 were successful long-term. Now, we have windows of time where people did really well, but think about it. You have people that spend their whole lives, they're on the Bloomberg and the other CNBC, and they go to school for this stuff. They're analysts. They know more than I do. They know more than all of us combined, and they can't time the markets because the stock market is perfectly efficient. And by perfectly efficient, what it means is if you buy a stock and I go buy some other random stock, over time, we're both going to make money. But in the short term, the odds are that one of us is going to be wrong and more towards both of us being wrong. So you can't time the markets. Now, it's misleading. I know I'm going to get some comments for this one. Oh, I'm buying stocks. I'm making all this money. When the markets go up, everybody makes money. I am so reminded of 2004, 5, 6, 7, 8. When everything was going up, everybody thought they were amazing. Everybody had the story of them getting in a cab and the cab driver saying, oh, I bought this stock and I made all this money. We're there. We're doing the same thing now. Everybody's got a story. Look at the crypto people. They made millions, supposedly, right? Perfect timing. Now look at them. They're still holding and they're losing, right? So when a market goes up, there's an old saying that a rising tide lifts all boats, or a rising tide lifts all ships. Right now, the market is basically going straight up. So if you bought a stock, chances are you did well and you think, oh man, I could do this. I'm just going to go buy a few other ones. I get very nervous when people come to me and they say, well, I was considering using you at Jazz Wealth, but I did a little reading and I'm going to go ahead and do this myself. It looks fun. If you enjoy it, go ahead. But just know it is not that easy. Think about it, how long people spend working on all this. So you can't time the market. There's actually a couple great studies. There's the DART study, where literally they did a study. They threw a dart at a wall, and the dartboard was made up of the S&P 500. They literally threw a dart each day and they bought a stock. And I think they did it for 2.5 years, if I remember right. They just kept throwing the dart, buy that stock, and then they had a sell dartboard, and they throw it at the sell dartboard. And once they had all 500 stocks, they did the sell dartboard, and they sold them. And the idea was, could they time it better than the dartboard? There's also a group called the Turtle Group. Is it the Turtle Group? God, I might be getting these studies confused. The Turtle Group, actually really, really cool. The Turtle Investors, if you want to read about them. Very secretive. I mean, we know who they are, but how they made their money, impressive. Cool story. Anyways, you can't time the market. If you want to buy stocks for your personal wealth, as we call it, your personal wealth account, then go for it. Have a great time. But with your retirement, please do not try to time the markets. You can't. You can't do it. I have watched a few people go and try to do it themselves, and they're very, very disappointed in the results, and it's only going to get a little worse. I don't like to be that guy to be like, you can't do it, but the odds are you can't do it. Odds are not even close that you can do it, so just keep that in mind. Okay, number 2, I'm all for you guys that want to invest for your beliefs. I get that you don't want to support guns. Some of you maybe are against that. I get that some of you have strong religious beliefs. Believe me, we're regulated to make sure that we actually accommodate you if those are your beliefs. I get the environmental concerns, companies and the way people behave themselves. I totally understand. Your beliefs are one thing. Don't let it hold you back from getting to your goals. And I'm going to give you a great example by pressing this button. Here is a comparison chart. I put up the S&P 500, that's the blue line, and then we put up the ESGD, and that is, it's an exchange-traded fund with more of an environmental, social conscience, basically. They want to see that people are doing the right thing, or companies are doing the right thing, and any of them that they believe are not, they take them out. And they only invest in companies that are, and around the world, by the way, this is not just in the US, environmentally and socially conscious. Now, how much do you believe in saving the environment? That much? Can you see the performance on the screen? Right? Could we not do something else to help save the environment? Could we go down a different path? Could we invest in the S&P 500 or the NASDAQ or the Russell or a group of stocks, make your money over the long term, and then give that money to a good cause that helps? I know someone's going to hate the fact that I just said that, but the idea is don't let your personal life suffer because of your beliefs. Now, if they're religious or you really just feel strongly about supporting a cause, that's great, but you've got to do your homework. You can't just go buy an exchange-traded fund like you see on the screen because you could underperform drastically. These are some of the greatest times here in the market, and if you're not participating in that because of your beliefs, is there something we can do, right? I'm not against it, but could we go and see if there's a better alternative where we maybe take out a few different stocks you don't believe in, but that you still participate? There's ways to do it, I promise you, but what I wanted to just point out there was even if your beliefs, the stronger your beliefs are, the stronger your homework has to be, basically. That's probably the easiest way to say it. So the more you're against all these different causes, more power to you, no problem. You're going to have to do a lot of homework. So just be prepared for that. Don't just randomly pick something and go, oh, that's awesome. This is a religious exchange-traded fund. Let's make sure it performs because there might be 10 other religious exchange-traded funds that do perform, or maybe we could put a basket together for you. So your beliefs, don't let that hold your dough back. Make sure you do the work for that. Okay, the most common thing that I see that people don't know when it comes to investing, and some of you may be able to guess this, you don't know what your goal is. A lot of people call, they email, and they go, Dustin, what makes you different than Edward Jones? Dustin, what makes you different than Fidelity? Why should I go with you over Fidelity? I go, okay, great. How much are you putting into your retirement accounts? They're like, well, I put in $200 a month into my retirement accounts. I go, great. What does that get you when you retire? I don't know, right? Okay, well, how'd you pick $200 a month? Right? That's what I hear. And I go, okay, let's think about this. You are putting money away for the future. If you get to the future and you don't have enough money, you can't start over. You don't get to go back to today and say, oh shoot, it was $320 a month. That's what I should have put away. You're just screwed when you get to the end. So people go, Dustin, why should I use you at Jazz Wealth? And that's usually the first thing I say is, well, okay, did they help you? Did the other company help you decide how much money to put away? Did they just throw a simple calculator in front of you and just you're supposed to just put the math in there? You need to invest for your goal. What is your goal? I make a lot of videos because I like people to be able to at least get a general idea. So the putting $50 a week away, what does that get you? Put $100 a week away. Oh, do I want $80,000 in retirement? Do I want $50,000? I do that just to get you to think, right? But you got to invest for your goal. So don't just randomly put money away. So one of the things that makes us different is if you have a goal in mind, I'll tell you exactly what to do. right? So that's the biggest thing there. That's one of the big ones. So let's give you an example. The example that I just gave, let's say the guy's 35 years old, wants to retire at 60, oh, no, not 60, 65. And he's over at Fidelity, let's say, and he's like, Dustin, why do I switch to you? I don't really see the benefit in having a financial advisor. And we go, okay, how much money are you putting away? He goes, I'm putting $200 a month away. I have no idea why. I just opened the account. I just started picking investments and putting the $200 a month away, and that's great. How much money will I have when I retire? Well, at this pace, he will have $226,000. Is that enough? What do you guys think? Can you retire on $226,000 in today's terms, right? Could you stop working today and expect to live the next 20 years off of $226,000? I don't think so. Where's my other pen? Yeah, you can't do it, right? 226 isn't going to cut it. Now, that's okay if all you have is 200 at the moment and you're redlining it, right? If you're maxing at 200, you go, I got to start. I know I got to put some money away, and this is all I can do right now. Understandable, but let's take a different approach. What they don't tell you at Fidelity is, let's take the same scenario, but let's do $50 a week. And let's study that. Let's go back in time and see if you were to do weekly instead of monthly, would you end up with more money? Not because obviously you're putting in a few more dollars at the end of the year, but would you end up with more money? Well, the answer is absolutely. Not a lot. $247,000, assuming the same growth rate, assuming the same years that go by. Now, just knowing that, doesn't that help? Like, what a difference. Now, are you going to retire on $247,000? No, it's not going to happen. You're going to have to figure out something else. We're going to have to rework this plan. Again, the reason why you might want to work with somebody, because we're going to stop you from crying, help you wipe your tears and go, okay, let's think of it this way. Maybe you don't need the 247, or maybe you need a little bit more, and here's how we're going to go about getting it. Maybe your dough's not straight. Maybe you just need to pay off some debt, and once you pay the debt off, you can go to 400. Okay, cool, right? So know your goal for sure. You got to know your goal for investing. If you're just randomly throwing money into an account, whether you're one of our customers or whether you're just out there somewhere randomly putting money away, I would be very scared. And I never do that. I never come on here and try to scare you into doing something. But this time I could do it because it doesn't have to be that I'm not asking you to come to me to work with us. I'm saying look at whatever you have and know your goal. What's the number? Now, don't email me if you're not one of our customers. I can't figure out your goal for you. But what is it? What's your goal? What's your number? How much do you need to put away? And wherever you have your account at the moment, ask them to help you. Ask them to help you. You're paying them something, whether you see it or not. You're paying them something. So ask for help. Okay, final one, number 4, growth. I want to talk about compound interest, right? It kills me how many people on the, I did a video, $28 a week is like $80,000 a year in retirement. It kills me how many people leave a comment that says, wait a minute, your math is wrong. And at first you're like, all right, this is great. I'm learning what people know and what people don't know, and that helps me create new videos. But now that it's been a while, I'm like, okay, first of all, don't you read the comments? Like, so wouldn't you see my answer like 100 times? Compound interest. That is huge. Now, most of you know compound interest from where? Your credit cards. Unfortunately, you guys, and most of us start this way, and that's okay. I mean, you live and you learn. Credit cards, we learn compound interest that way. We want to flip it the other way, right? We want the compound interest to quit working for them. Credit cards are a joke. You don't need a credit card. You're not getting free rewards, points, all that stuff. I don't mean to rant here for a while, but credit cards, they just don't make any sense. So if you're paying 15% interest on a credit card, you go, well, I'm going to pay a 15% annual interest rate. No, you're actually, I broke it down. You're paying 0.041096% a day. And you would think, oh, Dustin, that's horrible. Why would you tell somebody that's paying 15% a year that they're actually only paying 0.041096% a day? It makes it sound so small. It makes 15% sound like no big deal when they realize it's just a little bit a day. The problem is it's compounding daily, right? So you don't pay 15% a year. You're paying this every day. So if you have a $5,000 balance on your credit card, you're going to times it by this, Whatever the answer is, I don't know what it is. I honestly don't know. Let's say it's 5,00126 or something. I don't know. The next day. The very next day, times it again. The next day, times it again and again and again. That's compound interest. Only it went from 5,000, 5,126, 5,213, 5,305, whatever it is. And so it's working against you over time. You want to do the opposite. You want to get that stuff paid off so that this growth, maybe it's not 15% every year, right? But assuming you get like 8% growth or something like that, right? You put in so much money every month, well then as you go, it's compounding on top of itself, only it's working in your favor, right? So we want to make the compound interest work in your favor. Most people don't know exactly how compound interest works, and that's fine. Just know that you want it to work for you, not for the credit card company. And to do that, you would need to invest a little bit. Okay, the final thing that these articles give people a hard time for is that millennials think that the markets are going to grow at double-digit growth for the rest of their lives. And that's okay. I mean, you know, look, the last few years have been stellar. The last, 8 years really have been pretty good. So understandable. You've grown up in an environment of great returns. Most of you that got started investing anywhere in the last 8 years think this is the easiest thing you've ever done. Well, it's not. I wouldn't have spent tons of money on these towels to send to our customers when the markets fall to make them feel better if everything was just always easy and going higher. Here's the thing. For the next few years, I want you to expect 3.5% to 5.5% on your investments. You could do better. Already this year it's doing better than that, right? The markets are doing much better than this, but that could change. And going forward, expect less. JP Morgan, Goldman Sachs, and T. Rowe Price, I believe, are already telling their customers to expect around this much for the next couple years. Because the markets have moved so far. It's time for them to take a break. It's time for things to just calm down. It doesn't mean we crash, right? So all the doomsdayers that are buying like 500-gallon buckets of rice and storing them in their basement, really, right? It means that we can take a break. We can relax for a while. Totally cool. But that might mean you make a little bit less. So don't be disappointed. Like this year, they said the same thing this year. Expect 3 to 5%. You know, the markets are doing better than that, so you're kind of like, oh, they didn't know any better. Going forward, expect a little less growth, right? We're trying to prepare our customers for this. We want to at least expect that, but hopefully we could do better, and we'll see what happens, right? So that's it. There's just a few things that maybe you know or maybe you didn't know about your dough and investing. Like I said, tomorrow, no dough show, but there will be a video. I see that it's being edited as we speak, so hopefully we could post it at 1 o'clock tomorrow. Very, very cool idea. And I want to know your feedback. If you're a regular viewer, good, bad, or ugly, I just want to know the feedback on the video. We'll be back at 5 o'clock to do the closing beat with the stock market update. And if I can help you, come back then. We'll see you then. Enjoy, and have a great rest of your day. See you at 5 o'clock.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.